the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to the REIT that focuses on conventions and country music. It's Ryman Hospitality, ticker symbol RHP. We'll get to the strength of Ryman's business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt, both of you have 8s.
Yeah, I said an 8. When it comes to group-focused hotels, there really isn't anyone on Ryman's level other than maybe like Las Vegas casinos. Ryman owns 5 out of the 6 largest non-gaming properties in terms of convention space in the United States. A lot of demand for conferences, conventions, just big spaces to have gatherings. And remote work, which was once feared as the Achilles heel of this business, has actually proven to become a tailwind because getting in person and collaborating has become even more important. Asset quality is second to none. The Gaylord hotels are fantastic properties, but it is a somewhat cyclical business. At the end of the day, these are hotels and performance venues and things like that. In the fourth quarter, their business performance was below their expectations because we saw, quote, softness in leisure holiday demand, and that's definitely something to watch, and that's what prevented me from giving it more than an 8.
Yeah, also an 8 and no notes.
Right on.
In the words of Charlie Munger, I have nothing to add.
There you go. Exactly.
So one of the other places, right, the Grand Ole Opry, they own that.
The Ryman Auditorium, that's where their name comes from.
Right.
Boom.
Old Red Restaurant.
Yes, Old Red, the big one on the Las Vegas Strip that just opened.
They own a Marriott, Five Diamond in Texas. Mm-hmm. Marriott actually operates most of their properties. They have
Austin City Limits.
Marriott, so yeah.
Beautiful. Makes sense. So a lot of premier properties there. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Jason's at an 8. Matt, you're at a 9.
Yeah, and I've been following this company for years, and just honestly, the masterful way they navigated COVID was really what did it for me. With this, made me a believer. Mark Fioravanti, hopefully I pronounced his name correctly, he's been CEO for just 2 years, but he was kind of the understudy of longtime CEO Colin Reed, who was really the leader during that. He's been an executive with this business for over 20 years, and I mentioned navigating the COVID pandemic. When the stock dropped like a rock at the beginning of COVID, they actually pivoted and made it like an advantageous situation in a way. On and you're right near the Gaylord National Harbor. They said, okay, if we are going to operate at like 10% capacity, let's just shut this down and do those renovations we've been wanting to do. Let's make our properties more valuable as a result. Every single executive started buying Ryman stock hand over fist. I've never seen any insider buying spree like this. They great leadership during tough times. They've beaten the S&P 500 by about 250 percentage points since 2010, and under much of the same leadership team.
Yeah, I came in as an 8, and I'll talk about why. But again, it was masterful how they navigated the pandemic, like you said. So and it's because the decisions they made very quickly: stop paying the dividend, get every single dollar we can out of our available credit. Let's bolster the balance sheet and be ready to get through whatever happens. And then making those quick, right, long-term decisions very, very well was good. My only concern is coming out of the pandemic. We've seen them be. I think they've been aggressive with growth, which is smart. The Gaylord Rockies was a joint venture. They own the entire thing now. They bought that Marriott in Texas I talked about. They've used a lot of debt to do it. So they pushed leverage ratios up at a time where debt servicing costs were already on the rise. I think that could hurt returns and could affect the dividend whenever the next economic downturn happens, because this is a cyclical business. Despite the tailwinds that I agree completely with Matt, we've already seen occupancy rates fall a little bit. The other KPIs look really, really good, like RevPAR and other metrics like that. But I do think there's a little bit of risk they've created with a balance sheet with leverage.
Moving on to financials, a 10 is a fortress, a 1 is yikes. Jason's at a 6.5. Matt's half a point higher at a 7.
Yeah, excellent revenue growth. The fourth quarter revenue was at an all-time high. In the fourth quarter, remember, this is when they called their results disappointing. They booked 1.3 million future nights during the fourth quarter at all-time high average daily room rates. They just repriced their term loan. They were able to lower their interest rates by, that should take 25 basis points. the debt is on the higher end. Jason hit the nail on the head there. They've been aggressive with growth, but they've also been aggressive with debt. They have $3.5 billion of debt for a $5.5 billion market cap REIT is on the high end. Not a problem when times are strong, but as Jason mentioned, what happens when things turn? And if daily room rates drop, if occupancy drops, if they're not booking all of this new convention space they're building right now, we can see margins really start to compress.
Yeah, and again, the reason I'm a little bit lower is just the leverage ratios, because this is a more cyclical business than a lot of REITs that we think about. And that does put investor capital to some extent, but over the long term, I don't think investor capital is significantly risked here, but I think the dividend is a little more at risk. That's the only reason I'm just a touch lower than Matt.
Jason, let's talk valuation. How well will Ryman stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
So again, back to just the little bit of a difference with Matt and I here. My safety score is a 6. Stock's not cheap. That helps when you think about a good valuation helps offset some of the risk, I think, because of the cyclicality of the business. You have that leveraged balance sheet. The downside of the upside of lower rates, right? So if interest rates do fall, that'd be good. But if interest rates are coming down, it might be because the Fed is having to bolster a weak economy, which would not be healthy for the business. So it's a little bit of a two-edged sword there. I do think 5 to 10% returns probably on the higher end of that range. However, so if you're looking for yield and a stock that can generate total returns close to the market's long-term averages, I think you're probably going to be able to get that with Ryman.
Yeah, and I said the same 5-year return range, but with a big asterisk there. I think if interest rates normalize and if demand stays strong throughout the next 5 years, it could be 15% plus easily. Those are both big ifs. I gave it a safety score of 7. They're top-notch asset quality, great visibility into future revenue. When you think about group-focused business, if you're booking a big convention for your company, you're not waiting to see what the economy is doing and then booking for 2 months from now. You're going to reserve the place 2-3 years out. So great visibility into future revenue. That gives it a major advantage in corrections and things like that. But this is still a rate sensitive and economically sensitive business, which is why I couldn't give it higher than a 7.
Time for everyone's favorite topic. Jason, is there a company in Ryman hospitality space that you like better?
There's not really any other company that does exactly what Ryman does. You think about with REITs, you want to start with irreplaceable properties, and having these large convention properties outside of Vegas is massively valuable. Nobody else has the collection that they have. You bolt that on with it's exceptionally well run, and there's nobody else that's even close if you're looking for something in this space.
Agree. Ryman's the best in breed company in its space. I own it. Just to make this a more interesting topic, I would say maybe Vici Properties, because they own a lot of these Vegas hotels that have a ton of convention space, and it's been beaten down lately. And the valuation wise, it might look a little more attractive.
Thank you to Matt and to Jason. They've given Ryman a solid overall score of 7.0 out of 10. Short of that 8.0 that would force me to own shares, but pretty solid and would probably get interested on weakness. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a surprise to both you and to me. Till then, Fool on.
Hey, this is going to blow your mind. Greg Garrabrants is 4 years younger than Anthony Noto.
Wow.
Whoa.
Garrabrants has been, and I knew he was young. I knew he was young when he became CEO, because he was named, they named him the CEO literally the week of the market's peak in October 2007.